In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
Hey everyone, and welcome to the last FreightWaves Now of 2019. So we've got a big show today. We've got Andrew Cox coming in with his debut talking about the DHL Pricing Power Index. Donny Gilbert talking to brokers to see where capacity is the tightest in the country. But first up, the carrier update presented by Powerfleet. Hey everyone, and welcome to your carrier update presented by Powerfleet. So it's the last carrier update of the year, so I think it's a good time for us to look back and see where we've come from over the last 12 months or so, just to see where we're going. So behind me, the outbound tender volume index for the United States. We've had a bumpy ride this year, so starting off with a pretty mild January. Well, it really was a typical seasonal pattern in January. We had muted volumes throughout February. Things picked up in March. Came into a softer than anticipated peak in the summer. Volumes did not really exceed expectations there, well under 2018, which you see in the green here. And then the May volumes as well were really disappointing. It really set up for a hard year for carriers, with missing out on that big peak season, which normally fuels and keeps carriers going throughout some of the slower months. And then things started to pick up here at the end of the year, like towards August into September, volumes exceeded 2018 levels. Again, 2018, big robust year for most people, thinking that you can't possibly compare it to last year. Well, we did, and we broke through that level about right here. Capacity still didn't really show any significant tightness, but the demand side was definitely there. October, November, we kind of smoothed out a little bit, and then into December, we really exceeded expectations after the Thanksgiving holiday, with volumes averaging roughly 6 to 7% higher throughout most of the month of December, excluding this holiday period here, where the holiday was a little bit further up in the month versus last year. So capacity itself looks like a big smile. Earlier in the year, here you got your reefer outbound tender rejection index starting off pretty high in the early part of January, and then falling rapidly throughout January, and then leveling out in February, and really started to degrade throughout most of the spring months. So April, May, very disappointing in terms of capacity. So we really saw spot rates hit their lowest levels in multiple years throughout these months right here. Then things started to tighten up, as we normally would see in the month of June, July. We had that nice seasonal little peak there. Reefer demand really had a nice little peak, but van demand not as strong as we would anticipate. Tender rejection rates hovering right around 5–6%. And then we go into September, October, where we saw a little bit more activity, and then really didn't see the market truly wake up until the end of the year, right now, in December, around Thanksgiving, with that contracted holiday period. Reefer demand, of course, or reefer capacity, was a little bit more volatile throughout the months. But again, highest value of the year hit on Christmas Day at 14.25%. Pretty significant moment, because what I'm going to show you next is this a shift in direction of the freight market? So the reason we look at the freight market peak seasons to judge just what the direction of the overall freight market is doing. Behind me, I have the DAT Long Haul Freight Rate Index behind me, and the lines that you see on here are the distances between and the directions between the two seasonal peaks of summer and winter. You see anything in red here means that we've had declining momentum. So the peak in the winter was lower than the peak in the summer back here in 2015. And if everybody recalls, 2016, a softer year. But by the end of 2016, the two directions had changed. We now had a lower summer peak and a higher winter peak. The market was starting to turn back up and heat back up. And then, of course, 2017 into 2018, one of the biggest jumps in history, 20% rate increase from July of 2017 into the end of 2017. And then again, we had this huge peak in the summer of 2018 before declining rapidly through the end of 2018, which I thought was a very interesting fact because most people just consider all of 2018 to be this big, huge, robust year when actually by the end, the second half of that year was actually a contractionary period. Right now, we're sitting about flat. So the market itself, again, a lot of these rates haven't been fully actualized. We have not seen the full materialization of the winter peak just yet in the freight market. So this is expected to go up a little bit more, especially with tender rejection rates hitting their highest levels of the year. So what I'm really expecting to see is the market shifting its direction. Maybe not going to blow up like it did in 2017, 2018, but it's certainly a positive sign for carriers looking into 2020 in terms of direction. Now, does that mean that you need to go ahead and start buying a bunch of trucks again and counting on October to be, or January to be super strong? No, it's not. Behind me, the Cass Freight Shipments Index, all the shipments in the country in the surface transportation, LTL, truckload, rail, any of that, every single January, you look here, every single January, volumes decline. It's because it's a slow month seasonally. Don't expect it to be super robust, but the general direction of the freight market right now looks a lot more positive than it did this time last year. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hey everyone, and welcome to your broker update. I'm here with Donny Gilbert, our broker specialist here, going to give us some updates on what we need to see in the capacity in the United States.
Good morning, Zach. So this is that week that's between Christmas and New Year's.
Super busy, right? A lot going on.
And, a lot of people take that time off, but I'm one of those ones that always used to work that week because you have a lot of drivers go home for Christmas. It's the largest holiday where drivers take their time off. So you have capacity at the lowest you ever see it during the year. And of course, as we go through this week, we'll be gaining capacity every day. But as of the 26th, a lot of drivers just don't come out of the house on the 26th. They don't want to go home for one day and then jump back down out on the road. So your large carriers, they have a lot of loads sitting on the yards right now that are loaded that need to be delivered. And they're hoping drivers will come back, but they don't answer the phone. They forgot, and they thought they were coming out the 27th or the 28th, and a lot of those drivers don't get back on the road on the 26th, so it backs those carriers up on their deliveries. Well, back them on their deliveries also backs up their new pickups. So when shippers are missing their pickups, here we're at the end of the year, they want that freight off their dock. So we're going to shift a lot of loads to the spot markets. And right now with capacity being really tight for this week, but we're gaining each day, the rates are going to be pushing up. And that's one reason that we see what's going on with tender rejection rates. Here I brought our map there, just our outbound tender volumes, and I brought both our reefer and drive-in tender rejection rates. Here in blue, we see drive-in, or the volumes for both drive-in and reefer just drop down. And this is what's expected throughout the week of Christmas. There are a lot of places that, obviously they close on Christmas Day, and of course a lot of places that are closed during this week as well. So expect freight volumes to drop, but at the same time our capacity drops as well. And when that happens here, we see our drive-in tender rejection rates pushing up to 14.15%. That's the highest we've seen them since the retail season of last year, so really late 2018, and there's actually the coming down in 2019 where we're back at 14%, but that's when the freight rates were pushing downward. Again, reefers at 22.55%, so here over 20% on reefer, so less than 80% of the loads are being accepted at contracted rates. So here, this is the highest levels we've seen, not necessarily for reefer. Reefer's probably back at these levels back in the peak season and produce season, but here we see a lot of upward movement of spot market rates pushing up, which is why everybody is right now, this is the time of year, if you are out on the road right now, you're probably going to run through New Year's as well. Either you kind of take off through Christmas and New Year's, or if you return right now, you're probably going to be out through New Year's, and that's so they can get a lot of money right now. So here's one of the biggest weeks of the year for a broker to jump out and make high margin loads right now, but they have to get in and look for them.
Yeah, so because it's it's an awkward week, honestly, because we have a Wednesday to Wednesday holiday period, so that's going to make a lot of supply side contraction.
Yes.
So you're just not going to have the driver availability that you have the rest of the year.
Here with shippers wanting these loads off their docks by the end of the year, it's going to be those ones that really need it off to make their books look a whole lot better. They're going to pay for those trucks. They're going to pay for those rates to get these loads moved. So right now, they want them, it's not just the end of a quarter or end of a month where, we can roll this into the next month or the next quarter. They want this closed out by the end of the year to make 2019 look as best as they can. Going to a map here, these are outbound tender rejection rates, so it's both reefer and dry van together and flatbed mixed in. And we see a lot of color right now. We've seen this map many, many times that has a lot of white in it. So right now, a lot through the Midwest here, and even a lot through the Southeast, lower Alabama, Florida, North Carolina, showing a lot of color in here. And these are where the capacity constraints are tightening up, and that's pushing our spot market rates up. Of course, when the spot market rates come up, tender rejection rates come up, and that's where we start showing the blue. We got our down here at the bottom, you see, as the gets darker, blues gets darker, our tender rejection rates are going up, shown here on our legend. And Northeast here, of course, in comparison to our contracted rates, the Northeast has a lot lower contracted rates for outbound loads, but we see a lot of blue coming in here, and these loads are picking up in the Northeast. So right now, being the Friday before the new year, I would kind of look at a lot of our larger markets right now and see what's going on in those. Memphis right here, again, we see Memphis, the blue line here dropping down. These are our volumes, dropped down 44% over the last 3 or 4 days.
Well, that's normal holiday.
Yeah, and this is as expected. So, this is not anything to be concerned about, but here we want to watch these tender rejection rates. Reefer tender rejection rates, almost 54%. So almost 55% or 45% of those are being accepted at contracted rates. It's very, very low. That tells us right now we obviously have a very high push up in reefer.
Well, there's also reefer carriers. They're not as prevalent as dry van carriers, so they're a lot more exposed to these supply side contractions.
Yeah, and then we have even dry vans jumping up to about 14%. So here, that's a fairly high tender rejection rate for Memphis. They have dipped down just a little bit in the last day, but still these are very elevated tender rejection rates. We get excited when they get over 10%.
So what should brokers do about Memphis? How do they figure this out?
All right, so we have loads right now. Memphis is a very big market. You got the railhead in Memphis. You have a lot of shippers out of the Memphis area. And so right now they need to be watching their spot market, going to their customers and saying, hey, what can I help you with? Because right now these shippers are finding out these carriers are supposed to be picking up their loads. They may be showing up, they may not be showing up. And once they figure out the load's is going to cancel from a carrier, they're going to be jumping the spot market, jumping to find capacity. And that's where a broker can really jump in, cover that load for them. Of course, it's going to be a higher rate, but they need the load moved. And then they can go out and buy a truck for these carriers and get that load moved. Other markets that are very similar to Memphis, of course, we got Harrisburg, up to 18.06% on tender rejection rates. Atlanta, 11.23. Atlanta's been a very, very weak market this year.
Soft in the Southeast.
Yes, seeing it jump up over 10% was very exciting for me. And of course, Chicago, 10.77%. So we're seeing all these move up, and these are going to be the highest tender rejection rates that we see out of these markets. They're going to drop back down after the first of the year. So as a broker, I would keep my rates elevated probably through at least the first week of January here.
For sure.
Because it's going to take a few days for these large carriers to catch up on what they're doing. So as their drivers come out, they'll catch up. They're still going to be missing loads the second, the third, the fourth. So brokers need to keep in there, keep in contact with their customers, keep an eye on the spot markets, and jump in and help these shippers out.
Good deal. All right, Donnie. Thanks so much.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
All right, everyone, it's time for the DHL Supply Chain Pricing Power Index. Andrew Cox, welcome to the show.
Thank you, Zach.
Debut. So we've moved up here. We're at 45 on the Pricing Power Index. Tell us about it. What happened?
Yeah, we have. So we moved up. This is 5 weeks in a row now. Looking back 5 weeks ago, we were sitting at 15, almost all the power to the shippers. And I guess for people that haven't seen this, it's a gauge from 0 to 100, gauging the pricing power in bid negotiations between shippers and carriers. 0 being all the power to the shippers, 100 being all the power to the carriers. And like I said, 5 weeks ago, we were sitting at 15, and we slowly trended upwards to a balanced market. market. We're not quite there yet, sitting at 45 currently. And this right now, it's because we've had a volumes that are holding steady above 2018 levels. So we had a similar thing happen after Thanksgiving. We have this holiday cliff that it falls off of, but it troughed at a higher level. Same things happen now after Christmas. It's troughing at a higher level than it did last year. So we think that makes for a good holiday season. Current retail sales were up 3.4% this year, so we have a healthy and confident consumer spending a lot of money, which is good for the carriers, good for the freight volumes. And also, as Donny just noted, and you guys have both spoken about today, the tender rejections are at the highest level of the year, sitting near 14 now. So capacity is at the tightest level it's been all year. So this is good for the carriers. So with volumes holding steady and capacity being really tight, that's why we believe carriers have more power than they did a couple weeks ago. Right on. So what do you expect to see here in the next couple of weeks? Well, we are expecting a normal January and February, so a slower volume season, and we do think capacity will loosen up again. I don't think it's going to hold even above double digits. It's not likely that it will. So we do think that the shippers will gain a little bit more of the power, but we do a 3-month outlook in our weekly pricing power index write-up, and we have it at a balanced market. So this will sitting in March or so. We do believe that some of the capacity will leave the market. You see that in the used truck prices have fallen off a cliff in the last few weeks. So we think capacity will leave the market a little bit, and we'll have a bit of a balanced market here in a couple months.
All right, good deal. All right, thanks, cool. Andrew.
Thank you.
FreightWaves continues to follow the incredibly sad story of Indianapolis-based carrier Celadon Group abruptly shutting its doors, leaving 4,000 people without jobs weeks before Christmas. We here at FreightWaves want to help. FreightWaves has established a free job board for companies to post their openings and for people looking for employment in the freight industry to share their resumes. There's no cost for anyone to participate. Hundreds of jobs have already been added to the site. If you're looking for employment or have a job to post, head to freightwaves.careers.
All right, that'll do it for this year's editions of FreightWaves Now. Hopefully everyone by now has subscribed to us on YouTube, LinkedIn, Twitter, social media outlets anywhere, as well as checked us out on our app, FreightWaves Live. Everyone have a great and safe New Year's holiday.